careful in investing in speculative counters like Adani. I think until little more clarity comes out, I think it is better to invest into companies where the top line visibility and the profitability is more or less comfortable. I think there are many companies in the market which offer a much more steady kind of growth and which are more solid in terms of margin of safety. I think the investor should take a long-term view of investing into a basket of stocks which possibly cover a lot of promising sectors like automobiles, auto components, capital goods. So I think there are many choices available. I think if an investor wants to build wealth gradually, I think he should use a normal SIP approach rather than putting a lump sum amount of money in the market. And I think just before the budget, my advice would be to please wait for the budget, let things get clearer. And once the budget is out, I think you could get a lot of opportunities to invest in the market. But there is no need to hurry. You will be getting lots of opportunities. I think timing the market is not of any use, but obviously, staying invested for a longer term is definitely going to be the mantra for these small investors. See, I think Bosch is basically an engine component player and an MNC player, and I think my sense is that both the commercial vehicle sector and the tractor sector are doing well. So indirectly, this is a big positive, for the company. Apart from that, the company also makes CRDI, engines which are basically supplied to most of the passenger car companies. So I would believe that over the next say 12 to 18 months, the business trajectory is going to be pretty solid for Bosch. In the short term, it would depend on how basically volume offtake gets a push in the Jan to March quarter, because typically Jan to March quarter is supposed to be the peak quarter for most of the automobile companies. But I think if he can hold on for the next say 12 to 15 odd months, he could definitely expect a further upside, considering the fact that it's a debt-free business, a very high ROC business, and most importantly, a very high critical technology savvy business. I think he should definitely give it a long-term kind of approach for this stock, because in the medium to long term, I believe there is still a decent amount of upside which is left. So near term, stock could remain volatile, but yes, longer term, I think it's a stock worth holding on. I think hold on, considering the fact that L&T Finance Holding is basically a group company of the Larsen and Toubro family. Well, L&T is holding a majority shareholding, and I think hopefully in the coming budget, if some major announcements come about in the manufacturing and in the capital goods sector, definitely that is good news for the company. More importantly, L&T holding is largely into financing of tractors as well as vehicles, in the rural markets. So definitely, I think things are looking up. If the investor can hold on for the next say 12 to 18 months, I think most of the negatives are built into the price already, Cheryl. So I think he should hold on, give it some more time. I think he could definitely expect a decent risk reward in the next say 12 to 18 months. The basmati market is reportedly doing pretty well. In fact, despite the fact that stocks have not actually done that well, you look at all the rice stocks, especially Kohinoor Foods or KRBL, there has been some selling pressure, considering the fact that there have been some reports that exports to Middle East could get curbed in the near term. But I think looking at the fact that this is a seasonal business, and most importantly, it depends on the cost of inventory which the company carries on its balance sheet. I would believe that the investor needs to give in a little more time. KRBL is a very well-established player in the rice market, has a good branded positioning also in the market. So I think give it a little more time and continue to hold on. I believe the next year should be decent, with a decent crop, and obviously with paddy prices coming down, that would definitely help the company retain its margins which were there in the previous 1 or 2 years. So continue to hold on. That's the advice. See, I think Godawari Power should benefit because it's a backward integrated kind of play, and most importantly, numbers at least in the previous 1 or 2 quarters have been very strong. But frankly, despite the fact that numbers have been very strong, the going forward in the next 1 or 2 quarters is going to be pretty challenging, because most of the capacity for this company has got utilized. So now incremental gains are going to come in only from price increases. So I would believe that rather than buying this company in a hurry, it's better to wait for the stock to actually correct a little bit further, and I think that would give a decent risk reward. From a longer term perspective, the business will do well, but in the near term, the stock will remain in a very narrow range. So I think unless you've got a 12 to 18 month horizon, I would not suggest you to buy at the current level. Wait for some correction, and that would be an ideal time to enter. No, I think Adani Wilmar definitely should do well, because it runs a B2C business model, and most importantly, important critical inputs like palm oil prices have come down sharply, from their peak levels. My guess is if the investor has a 2-year view, then I think he should definitely not worry for what is happening currently with the group. In the short term, the stocks would remain volatile because the focus of the markets currently is on the kind of allegations which the Heidelberg report has presented. But I would believe that the fundamentals of the company remain strong. The business continues to grow very fast, and I think a B2C business always commands valuations in the longer term. So I think if at all the stock corrects and it presents an opportunity, then I think the investor should take a long-term call here. Don't look at the short-term price trend, but yes, longer term, definitely good amount of money could be made, provided the time frame is at least 12 to 18 months or roughly about 2 years. Yeah, IDFC First Bank can be accommodated if the investor has a 12 to 18 month horizon. Clearly, we have seen in the third quarter on all parameters the bank has done exceedingly well. As far as the asset quality is concerned, the net interest margin, the loan book growth is concerned, the CASA deposits are concerned. So I think keep a long-term view. I believe that within the private bank space, this is one of those stocks which could give decent returns, provided one keeps a long-term position here, at least 12 to 18 months. It's definitely a decent bet and is available at very attractive valuations at roughly 2 times FY24, price to book. I guess that good old days of specialty chemical companies in terms of margins, in terms of top line growth are now clearly looking over, and we may not be able to see the same alpha which was generated in the last 3 to 4 years. So I think incremental upsides, Cheryl, is going to be quite limited. So my sense is, if the investor has held on to these stocks, has made a decent amount of money, I think he should exit and get into sectors like capital goods, autos, auto components, where I believe the runway is pretty large and where the risk reward looks better as compared to specialty chemicals. The textile sector is coming out of a long problematic issue of rising cotton prices after a long time. So I think now going forward, the fully integrated garment manufacturers would obviously benefit, and I think the yarn companies would obviously be on the back foot. My sense is that I think you have to look at the larger players which are fully integrated, companies like Arvind or Gokuldas Exports. Typically, we believe that these companies are now well poised to record better performances in FY24. Hopefully, I believe the export market would also take off because competing countries like Pakistan are completely out of the textile market, and that gives definitely a better edge for the Indian exporters. More importantly, from a raw material perspective, the benefits in margins would be visible from the December as well as from the March quarter, and I think that would be a sort of a re-rating for these companies. And most importantly, in the coming budget, if there are some incentives announced for the textile sector, that would also help these companies. So Arvind and Gokuldas Exports would be my top bets, keeping a time frame of at least 15 to 18 odd months. IDFC is concerned, I think he could get a decent dividend yield because this is a power distribution play, and it has been rewarding shareholders with pretty good dividends. As far as PFC is concerned, I would believe that he could possibly also look at it, but provided he enters the stock at a slightly lower odd level. I believe that both these companies can give a decent kind of dividend yield if the investor has a 2 to 3 year time horizon, because normally when you look at dividend yield stocks, you have to keep a longer time frame to ensure that these dividend yields actually add to your cash flow. So these are not short-term bets. So definitely keeping a long-term view, I think you can definitely accumulate both these stocks, but from a long-term angle.
Okay, Atul Desai wants to know about SBI cards. Hemant, his average buy price for this one has been 780 rupees per share. So what should he do with this one?
As of now, it's good. The picture doesn't look good. We've been corrected for the past 7 months, and that's not gone away. And if I look at the longer term charts, I don't see any technical green shoots yet. My lower sold situation, so hold as of now. Safety sake, keep a stop loss at 680. We need a close about 750 and 780 for anything to improve on the medium term charts. Till then, I don't see anything, maybe a slight sporadic bounce here and there.
Alright, so that's the view coming in on SBI cards. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of your stock related queries. So viewers, don't go anywhere. Back You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And the next one that I have is coming in from Hemant. And Hemant is holding Aarti Industry at the price of around 600 rupees per share. And he's saying that he just got some shares of Aarti Pharma Labs at around 776 rupees per share. I'm unsure, Avinash, to track this one, but he wants a fundamental view on Aarti Pharma Labs.
I think Aarti Pharma Cheryl has got listed only today, and I think it's a business which is for the specialty pharmaceutical business, which has got demerged from Aarti Industries. I think we don't have any data points from Aarti Pharma as of now, but I believe at least based on the current set of numbers which is presented by the company, the stock trades at a multiple of roughly 18 times. So I think one will have to wait for further numbers to come out and see what is the kind of scalability of the business, what is the kind of commentary which comes out post the current quarter, and only then one could take a longer term call. But I think the investor can hold on to these shares. It's definitely a promising business which can see a lot of good scalability, provided if the investor is patient and for time frame of at least 6 to 12 months. So I would believe we should hold on to these shares. Definitely, I think looks promising, but I think more data points are required to give a conclusive view on the company's medium to long-term outlook. I think if she has to take out any stock from the list which you mentioned, I think it would be PNB. PNB is one of those banks, Cheryl, which has not delivered the numbers which broadly the market had expected. I think stocks like IDFC First or Bank of Maharashtra have done remarkably well in the third quarter. In fact, Bank of Maharashtra has shown a very strong growth in its profitability, in its asset quality. So I think definitely, as far as I'm concerned, PNB would be an exit. The rest of the banks she can hold on. I think keep a slightly longer term time frame, at least 12 to 18 months, and then only she could get a decent risk reward, for the holdings which she holds in all these bank, counters.